As a word of introduction, NextEnergy Capital, of which I am the founder and CEO, is a specialist investment manager in renewable energy. We currently manage about $2.5 billion spread among 3 different investment vehicles. One of those is a listed vehicle on the London Stock Exchange, and 2 of those are private vehicles. NextEnergy Renewables is an idea that we have conceived on the basis and on the back of our nearly 15 years of experience in the sector. And the idea behind Nren, as it's known, is that investment companies, private equity funds in renewable energy are generating higher returns generally than other listed companies that focus on the same asset class. On the other hand, many of the listed investors do not have access to these private funds. And so we've created Nren to give listed investors, retail investors, institutional investors that by their investment mandate cannot invest in private funds access to this market opportunity. Which is relevant, as I said, because as you can see here from the slide, the track record of the private vehicles is a financial outperformance versus the listed vehicles. So we've created Nren with that idea in mind. We've also put in place a very attractive fee structure, in fact, the most attractive fee structure of the listed companies on the London Stock Exchange. So as a target on the IPO, as Roland was saying, we're targeting 300 million pounds. We are looking at a 5.5p per share dividend in the first full year of operations. And as a return target, we are, as an objective, we've set ourselves 9 to 11% total shareholder return, which includes the dividend and also the expected increase in the NAV of the company over time. The size of the market opportunity that we are targeting, you see on this next page, this is actually an analysis, as you can see above the graph, from BP, and they are forecasting trillions of dollars of new investments in renewable energy over the next 10, 20, 30 years. And that is the market that Nren is targeting. And it is targeting it, as I said, via the private equity funds, the private platforms that are expected to supply a very large proportion of the capital required for this energy transition. And as I also indicated, the financial returns that those private funds are targeting are particularly attractive also on a relative basis. The investment case around Nren is to secure those higher returns through a 3-pronged investment strategy. The first bucket of the investment strategy is to invest in our own NextEnergy Capital's own private vehicles. And we have a seed asset, which is an award-winning private fund that is focusing on the international solar sector, that has already deployed capital, that has allocated the capital that it has raised to date, and is targeting a net investor IRR of nearly 15%. In addition, Nren will have preferential access to all of our future private vehicles, which should give it a significant further avenue for growth. The second bucket of our investment strategy is to find the other specialist private funds, private platforms, and back them through allocating capital of Nren to those vehicles. And then the third bucket of the investment strategy is around the concept of co-investments, where a participant in a private vehicle is given the right to co-invest in selected assets alongside the vehicles, the funds that it backs. That third opportunity, the co-investments, is particularly attractive because it allows us to complete the portfolio construction of Nren, but also secure very attractive individual investment opportunities that offer attractive return profiles on a low-cost basis. In terms of the broader renewable energy and energy transition sector that we are focusing on, On the one hand, we have the established technologies such as wind, solar, hydro, and others. And on the other hand, we are expecting to see the evolution of many other new technologies evolve from being what I would define as venture capital investments to infrastructure-like investments, and therefore becoming investable from a similar structure and similar profile as the currently established investment opportunities in solar, wind, and other technologies. And so Nren will initially focus on the established infrastructure technologies. As those new technologies and very exciting growth prospects become infrastructure-like, we have the opportunity to take advantage of those new technologies, those emerging technologies in new countries via the specialist fund managers that we will work with to secure exposure in those markets. Some of the highlights around Nren include, again, it is the only vehicle that public market investors have to access private renewable energy and energy transition funds. We have not found any other opportunity on the London Stock Exchange or any other public market that we have looked at. The returns are very attractive with a very solid dividend flow and an expected NAV uplift over time. The returns on a relative basis are expected to be significantly above what the other listed renewable energy companies on the LSE are currently offering. Because of the investment strategy, we expect to have a very broadly diversified asset base, both from a technology perspective, a geographic perspective, a project life and project horizon perspective. You can add on to that exposure to various currencies and various revenue coverage models and so on. So we're expecting to have a very broadly diversified asset base, but yet deliver financially more attractive returns than others. As a team, as I was saying, I have over 190 people in my group. We have a long-standing track record in the management and the creation and management and running of listed vehicles like Nren, or also of private investment vehicles like the seed asset that we will be offering to Nren post-IPO. On top of that, the fee structure that we have put in place is very strongly aligned to shareholders. We have a very low base management fee of about 40 basis points, which is compared to other management fees in the order of 1%, but it is the performance fee that we only achieve and we only receive if our performance over several years is above the benchmark of 8%. So very much aligned with the returns that we will be generating for investors over time. I'll jump ahead a couple of slides because, as Roland was saying, you will receive this in time and therefore be able to look at it in more detail. If I take you to the seed portfolio, which is NextPower 3, a private fund that we created in 2018. And as you can see from this slide, it has built up a very attractive, diversified asset base across multiple high quality assets in different countries, such as North America, the US, Chile, Europe, and increasing significantly in Europe, and a small allocation to India. It is an award-winning fund. It received the 2020 Renewables Fund of the Year by Environmental Finance, heavily judged on its strength of the ESG considerations that go into the investment decision-making and the investment management side of this vehicle. Current investors in NextPower 3 comprise some of the what I would call ultra blue chip European institutional investors, such as KLP out of Norway or Skandia out of Sweden or one of the Swedish state pension funds. So Nren will be joining a very high quality cast of current investors in an award-winning fund that is generating, as I was saying earlier, financial returns in the order of 15%, which is fantastically attractive if you consider that it is focused on the solar infrastructure sector. The other opportunity that we are pursuing is the opportunity to co-invest alongside funds that we allocate capital to. And here, particularly attractive because of the number of funds that we will invest in will show us all of their individual investment opportunities. And so we will have a very large base of options of potential investment opportunities to consider, from which we can select the most attractive ones. And most attractive can be low risk, can be higher returns, can be in a particular geography or in a particular technology. And so that flexibility in the investment thesis allows us to create a very well diversified asset base across geographies, across technologies, project horizons, and so on. Some of the other highlights of the IPO are a very strong board of directors, and you'll find details on the website and here also in the appendix of this presentation. We are targeting a dividend yield, as I've said, a 5.5p per share in the first full year of operations with a full payout model. So we would expect that to increase significantly over time. In terms of the date for the IPO, we, as Roland has said, have launched the IPO. The book is expected to close on the 4th of March. And on the website, NextEnergyRenewables.com, you have an extensive set of details around the offer. The prospectus is on it. You have further details on the key information document and everything that retail investors require to subscribe to this offering. From an ESG perspective, jumping ahead again a couple of pages, this an IPO of 300 million sterling in terms of the environmental impact would equate to roughly taking 750,000 cars off the street, powering nearly 400,000 UK homes, or providing clean electricity to nearly 1 million people. The connotation, the ESG connotation of investing in private funds in the renewable energy and energy transition sector is particularly important because it is these funds that for the most part are financing the new construction of assets, mainly not buying assets that have been built previously where the environmental impact has already taken place, but actually funding the new construction of assets over time across regions and across technologies, as I said. So before opening the floor for questions, in terms of summary conclusions, a very large market, a market that is dominated by private funds alongside the large current power and oil and gas companies, a market in which the listed companies today will actually play a very small portion of that funding requirement, and a market where private funds are significantly outperforming listed vehicles in terms of the financial returns that they are able to secure. So Nren, as the only vehicle giving the listed market, the listed investors, access to this fundamentally attractive market opportunity. We've done a lot of pre-work in creating this vehicle. We have immediate capital deployment opportunities through our own first vehicle, NextPower 3, a very attractive investment opportunity in terms of asset deployment, regional diversification, and financial returns. And we would expect to complete the deployment of the IPO proceeds within 6 to 9 months post-IPO. The ESG is a fundamental part of our investment strategy. In fact, if you go to our own website, which is nextenergycapital.com, you can see under the sustainability section a number of our market-leading environmental reports and assessments of projects that we undertake, as well as assessments from an ESG perspective of the other vehicles that we currently manage. The fee structure is the most attractive fee structure that you will find in the sector across all of the nearly 20 companies that comprise the listed renewable energy companies on the LSE currently. And the level of corporate governance is the highest. It will be a premium listing vehicle, so with the highest level of corporate governance. And then finally, NextEnergy Capital, as a investment manager with the track record we have, having identified this market opportunity, having implemented it now with the help of AJ Bell and others, we are uniquely qualified to successfully execute the investment strategy. And with that, I'll be happy to take any questions.
Question from me, if I may. The premise or the basis is that the private has outperformed the listed, the public. Why? Could you talk to why it's been that's been the case?
Sure, we've identified 4 or 5 reasons for that. The first one is that the private companies have a much more patient investment strategy. So where listed vehicles have to deploy their capital in short timeframes after raising that capital, usually 6 to 9 months, the private vehicles have investment periods of about 4 years. So they can be much more disciplined in looking at the market, in undertaking analyses, and not being forced to rapidly acquire assets that perhaps do not meet the return criteria or the investment criteria that they are targeting. Another reason we see is that the private vehicles are more flexible from a geographic perspective. And so as certain markets overheat, the listed vehicles are very focused on a few markets. The private funds actually have more geographic flexibility, and we actually experienced that in NextPower 3, where for a moment in time pre-COVID, for example, the Iberian market for solar infrastructure became overheated. We made lots of bids, we lost them all because people were willing to offer more money. So we migrated our focus onto the US market, where we were seeing much better financial returns. And you can see how many assets on that previous page, we built up in the US as a result. So that geographic flexibility allows a better deployment of capital also from a returns perspective. And then the other point to make is that the private funds ultimately build portfolios with a view of maximizing their value at the end of the fund life, which is usually 10 years. The listed vehicles are more focused on gathering assets, on building an asset base. The private funds are more focused on maximizing the value at exit, and therefore the portfolios are constructed with that in mind. So you take those 3 or 4 reasons together, and the hard data, even from our experience, i.e. our private funds generate significantly higher returns than our listed vehicle. We can see that that is hard data that shows the track record of that happening.
Question, are you investing in, or will you be investing in energy storage?
Over time, we certainly will. Today, energy storage is still what I would call a venture capital type investment, not an infrastructure asset class yet, simply because on the one hand, the upfront investment costs are still too high, and the visibility on the forward cash flows is still too uncertain to be qualified as an infrastructure investment. The exciting thing about Nren is that we have the capabilities, the flexibility to invest in those very attractive, very high growth technologies as they become infrastructure asset classes. So we would expect at present, some of the investee funds that we invest with might have minimal exposures to energy storage, but we would expect that to grow very significantly over time.
Assuming you get the 300 million you're looking to raise, you mentioned you look to deploy that between 6 to 9 months. So how much of that initial money would go into the existing private funds that you already manage, or how much should go into new other investments?
So the investment strategy among those 3 buckets that I mentioned earlier is designed to be a third, a third, a third. So if we raised 300 million, we would immediately allocate 100 million to NextPower 3, and that investment would be finalized within the first month post-IPO because the board of Nren has already approved it. Then the second strand of selecting other private funds to back would be another 100 million. We've looked at over 40 of those private vehicles. We've identified 10 to 12 that we think merit further consideration. Immediately post-IPO, we would start due diligence and we would look to deploy into 1, 2, or 3 other funds within the first 3 to 6 months. And then the co-investments, that last 100 million, we would be undertaking in parallel to those activities so that we would expect to complete that allocation within the 6 to 9 months that I mentioned earlier.
A question about, I guess, I think on the co-investment side, what is the amortization of those projects, and what would then be the residual values?
So on co-investments, because we invest alongside the private funds that have defined time periods, usually 10 years in our sector, after 10 years, those assets will be sold. Usually a solar asset has a 40-year lifespan, a 35-year, even a 45-year lifespan. Other technologies have shorter or longer lifespans, but it is the duration of the fund that we are investing in that would also determine when we sell those co-investments, because they are investments alongside the fund. When the fund sells that portfolio, we sell our stake with that sale and therefore have that capital appreciation at exit, which we would then reinvest into new funds and new co-investments over time.
Thank you. And so someone asked about the presentation and not waiting for the recording. Just to reconfirm, you can get, I think presentations are on the Nren website, but they're also the prospectus is on the HMLU Invest website, and we'll be emailing you copies hopefully tomorrow of the slides that you've seen. And if not tomorrow, it'll be the day after, but we'll be very, very soon. So you have to wait to see the whole video if you want to get
absolutely. And Roland, if I may, so the company's website is NextEnergyRenewables.com. You will find the whole suite of documents there, as Roland indicated.
You can use other brokers if you want to, but wouldn't recommend it. Can the fund use leverage?
There is no structural leverage that Nren will use. So as we talk about a 9 to 11% return, this is a unlevered return. We will use revolving credit facilities to facilitate the deployment of capital, to avoid as much as possible having trapped cash on the balance sheet. But the way we've done it very successfully with our currently listed vehicle, NextEnergy Solar Fund, is we went out, we deployed the IPO proceeds, we used an RCF to buy new assets, refinance those through equity issuance, and then use the RCF again to buy new assets. And so you instill a positive cycle about deploying capital with an RCF and then refinancing that through equity and continuously growing the company. In fact, we, as a target, we have the 300 million at IPO, but we are expecting to take this within 3 to 4 years to over £1.5 billion sterling in market cap.
And on that, and then in the last 6 to 12 months, the track record of IPOs, the infrastructure and the renewables seem to have broadly done well, and some of the equities haven't done so well. Do you find the conversation, are you very confident for that figure at the moment? Do you have seed or kind of commitment to any of all of that?
So in general, the renewable energy sector, I believe among the 17 companies that are currently listed, is trading at about a 13 to 15% premium to net asset value. So the sector has done very, very well because it does generate high dividends. It does have a solidity of underlying cash flows. It does generate NAV increases, and investors in this low yield environment are of course looking for those type of returns. And so we expect Nren to absolutely follow that exact path. So at IPO, it will be 98p NAV. And we would expect as we deploy capital and generate value through that return differential, we would expect the share price to appreciate quite quickly so that the future capital increases will be done at significant premium to the net asset value, generating accretive transactions to the IPO investors. This is a renewable energy company with a different investment strategy that no one else is offering, but is focused on those higher returns. And so we would expect our share price to outperform the other ones in the sector.
Well, on that note, Mike, thank you very much indeed. Thank you for presenting and joining us this evening.